Good morning, everybody. Let me double check to see if my audio is working. Press 1 in the chat if you can hear me. Good morning, C Night. Glad to see you here this morning. Happy Monday. Press 1 in the chat if you can hear me right now, and we'll get started. Awesome. All right, so it is Monday morning, and markets are off to a pretty flat start so far. SPY is up just a measly 0.05%. Not much news came out this weekend, so kind of to be expected. The big news for today was China possibly reopening. So if we go to investing.com, hi RS, nice to see you here. Hi Tim's. Good morning and happy Monday to everybody. So if we check out the most popular news from investing.com. So we have the must Twitter poll, non-news in terms of, the overall market. We have the European Union gas cap, which has been in the news cycle for like 2 months at this point. L3 Harris and Rocketdyne, I'm actually not sure exactly what that is. Might read into that a bit more, but then the other news for today, the big news, is that oil is rising on hopes for the China economy. So basically, China is letting off of their zero COVID policy because they figured, well, our economy is going to go to shit if we keep people locked up to where they can't buy anything. So it did work wonders in bringing down their inflation to where their inflation reading was extremely low. I think it was like 0.5%, very similar to what we saw when we did our lockdowns. Interesting enough, if you go over to the inflation historical CPI. I don't like to use the Fred one just because it's let's see, percent change. So this is what we want. 2020, and I'm assuming, let's look at 2020. The inflation rate whenever we had our lockdowns in April was just a measly 0.3%. So that's exactly what happened with China too. So they locked down their economy and brought down their inflation to a very low reading, and that held for us obviously for a few months, and then inflation started to kind of ramp up. Then it really started to get out of hand once it reached 4.2 in the month of April of 2021. It's also kind of a comparison sort of thing because it was super low in April 2020 and then high the next year. Obviously, it's based on the previous year-over-year results. But obviously, we still have ongoing inflation at 7.1% versus 6.8% last year. So that means that prices have gone up a cumulative 13-14%. So, 14 to 15%, I should say. And that is just starting to eat into people's buying power more and more, which is recessionary because if people don't have as much money to spend on, the overall economy goods, that means that GDP is likely to come down. And we do have some pretty big econ data coming out at the later half this week. So Wednesday through Friday, we're going to get a lot more volatility. But today and tomorrow, so Monday, Tuesday, it's going to be pretty flat is what I'm assuming. So I'm probably going to open an iron condor assuming that. But I do want to show y'all what's going on this week. So today we only have a couple of treasury auctions. We have the housing market index, but I don't think that's going to have any effect on the market. We have building permits tomorrow. I don't think that's going to have any impact. Usually housing doesn't have much impact on the stock market. It hasn't, at least lately. That could change in the future to where if home prices start to come down in a major way, then that means that HELOCs or home equity line of credits It's going to be harder to borrow if home prices are coming down. You can't borrow as much money with the HELOC to invest in the stock market. So that will start to weigh on stocks later, but for right now, the stock market gives zero shits about the housing market. And let's see what else we got going on. API weekly crude oil, markets don't really care for that. But Wednesday we have the existing home sales. Consumer confidence is what I'm looking for at 10 a.m. So that's the big event for Wednesday. That's when you'll start to see some volatility in the market. And then not really anything else for that day. Thursday, you're going to get jobless claims, continuing jobless claims, which is less important than initial jobless claims. Initial jobless claims is right here at 8:30. But we also have GDP coming out on Thursday at 8:30. So that's probably going to be the big two events. For Thursday, we have GDP. We have initial jobless claims. So those will be two big events in one day. And then finally, to end the week, we have a really big kicker, and that's going to be inflation or PCE reading on Friday the 23rd. So expect a lot of volatility on Thursday and Friday, but in the beginning half of this week, we're not going to get much of anything. So Monday, Tuesday, I'm looking to do some iron condors. Not really much news coming out today, so definitely a decent day for it. SPY's currently down 0.1%. I can't imagine it's going to move more than maybe, I don't know, I'd say 0.5%, maybe to 0.75 today. So let's see. 383 is what it's trading at right now. Times 0.9925 would be $380 price target at the bottom that we're assuming that it's going to stay above. And then 1.00, I can't do numbers right now. 0075, 1.0075. So 380 to 385 is a range that I would expect for us today. Maybe calling it 386 just in case we get a bit of a rally. Sometimes whenever there's no news, that's good news. So we might see a little bit of upside. But overall, I expect it to be a very flat day. So I'm going to open an iron condor, assuming that we're going to be between 380 and probably 386. Let me see how much that credit is going to be before we open it, obviously. We want to make sure that we get a decent risk-reward ratio for it. But this is going to be... I think I'm going to open one that expires today, and then I'm going to open one that expires tomorrow. So I'm going to open two. Because tomorrow we're not going to get any big news either. No econ data, at least. So let's see. If we're assuming that it's going to stay below 386, the credit for that is actually decent just for the call side. And then if we add in the put side, assuming that it's going to be above $380, that is paying less, interesting enough. Even though, well, I guess SPY is closer to 386 than it is to 380 right now. But the total credit, it's an okay credit. I would say there's probably about, I want to say 85 to 90% chance of this trade working out in our favor. And right now, there's the markets are telling me that it's about 27 to 30% chance. So there's a decent discrepancy between what the market's thinking and what I'm thinking. So I think it's worth opening. 20, Jesus Christ, the bid is dropping on this like crazy already. I guess we're headed to that 386 level, so that might be why the credit is decreasing. Hopefully we can pull back to 383, low 383s. That way we can get a little bit of a better price, because the lower that we get in credit, the less that we can make in profit. If we're assuming that there's a 85 to 90% chance, we want to close them at 10 to 15 cents a piece. Let's see. Okay. And I would say this trade is probably worth around $300 to me. So I'll be risking a decent chunk of change for a $2,200. The risk-reward ratio on this isn't all that, which not ideal, but let's set some price levels that we want to exit before we open. Thank you, EJ, too much. Thank you so much. Let's set some price levels, though. I'm assuming that it'll stay below 386 at the top, right? Let me double check the numbers here. Yeah, 386. So if it goes probably above 384.5 right here, I think I'm going to close out above 384.50. I think that's a decent idea. And then for the downside, I'll probably close if it goes... this is kind of cutting it close. Maybe we can use some of these candles over here. 383, 382.50. Yeah, I think 382.50 is a good mark to watch. So at or below 382.50, and then at or above 384.50. Which means that you could even decrease the range to assume that it'll be between 382 and 385. Obviously, that'll get more credit since you have a smaller range for the iron condor. The smaller that you set your range for an iron condor, the more credit you're going to get. You could also turn this into an iron butterfly. That's another idea. I would assume it would probably be closer to the top of the range than the bottom of the range, because, again, I think that no news is good news. But you also do have the backdrop of recession fears in the market, which could weigh negatively. So I think there's kind of an equal and opposite sort of thing going on today, which should keep it in this balance between 382 and 385. But I'm setting my strike prices for 380, 386. If I can get the freaking credit for this, hopefully. I put in the credit, but I didn't get what I wanted for it. Come on, please fill my order, Robinhood. For the love of God. Oh, Robinhood, why do you have to do this? Can't see me. I don't know why, but since I switched to the new macOS operating system, it doesn't show my camera anymore. I'll try to fix it by probably tomorrow's live session, but for some reason with the new macOS 13, I'm just unable to show my camera with OBS, which is the streaming platform. Oh wait, it is showing me right here. Never mind, I fixed it, I guess. Can't see you, but I can hear you. Yeah, I don't... I'm placing the order way below the freaking bid price, but I'm still not able to get filled for this short iron condor. This is ridiculous. You see me, Eric? Thank you. Okay. I don't know why, but the bid price is like 2 cents above where I'm trying to place my order, and it's not filling me. So the market makers are screwing me over once again. What's freaking new, right? These assholes. Okay. If y'all really freaking want it, I will give you 3 cents below the bid. If you can't fill me at that price, then I think Robinhood is just broken. Oh my god. This is embarrassing for Robinhood. I'm literally coming in 3 cents below the bid. Am I still trading using Aries? I need to call them. I'll call them at 11 o'clock today. I'm currently under the PDT rule to where they stop me from trading for the next 90 days. But I'll call them up and have that fixed today. And then I'll be able to trade with the Aries account, and I'll be able to get much better bid-ask spreads, because Robinhood is just screwing me over left and right. Like, I'm placing this order so far below the bid, and it's just not willing to give me anything. It could be that there's super low volume on it, but I'm doubtful since I'm using SPY. SPY should have plenty of volume to facilitate this trade, but it just doesn't want to go through. 0.26. Yeah, I think we're going to have a flat day today too. I would say either flat or bullish though. This morning definitely looks like it's starting bearish, but I think with no news, it's more likely that we're going to be bullish. Would be my guess. All right. These guys are just ripping me apart this morning with this bid-ask spread. All right. Oh my god. I was ripped off with that trade. Okay, well, guess we're stuck with it. Alright, so I opened that Iron Condor. I'm assuming that we're going to stay between $380 at the bottom and $386. So very wide range that I have set for the Iron Condor, which gives us plenty of safety margin. But the price I got for those was absolute dog shit. So, not super happy about it. How much is the Discord? So I have a free Discord that you can join. I'll link that one too. The premium Discord itself that comes with the trade alerts, the Q&As that I do every Sunday, and then my trading journal, that's $30 a month. And you get 1 week free trial if you use the link that's pinned. Let me just type this in right quick. Premium 101. Freemium. Just opened a new SPY Iron Condor. This one expires today, 12/19. Looks like we just crossed below the 382 mark. Day trade. Strike prices, I'm assuming between 380 and 386. And I got ripped off for that trade, but that is okay, I guess. Alright, need to redraw that price level that we just broke through, and that was 382.5, I think. Currently, we're trading at 382.2. I'm going to give it just a few seconds, see if we come back above that. If not, we might have a bearish day. 377 is what you're expecting today? Yeah, I mean, we could just sell off some more based on the Fed meeting last week, but I think that has kind of already been baked into the market at this point. I don't see us selling off in a major way today, but we'll see. Not much news over the weekend besides China reopening, EU oil cap, Russian oil cap, I should say, and Elon's Twitter poll. Likely to trade flat today. And maybe slightly up, since no news is good news generally. But if the narrative right now is that we're going into the recession next year, that could mean that no news is bad news. So we'll see. Let's see if there's any other news that we're missing. Elizabeth Warren raises question on Elon Musk and Twitter. In a letter to Tesla board, the Elizabeth Warren asks, why do they call her the Elizabeth Warren? Just call her Elizabeth Warren. Elizabeth Warren asked whether investors have been harmed by Musk's time running Twitter. Really? Who fucking cares? Like, why does that even matter to you as a senator? Ugh. She's just trying to stay relevant. IMO. Kremlin said Russia still considering additional proposals for response to oil cap. Okay. So more oil cap news, not really surprising. Hints of a Santa Claus rally as the S&P 500, NASDAQ begin week on a buoyant note. Tesla, Moderna, stocks are the ones in focus today. Yeah. Dion Camper said correct. Yeah. Elizabeth Warren and all politicians, all they want to do is just garner attention in any way that they can. Like, it doesn't matter whether or not Twitter, like, how is that going to impact the country, whether or not Elon Musk taking over Twitter is affecting Tesla stock. Just stick with your job, Elizabeth. Let's see. 10-year Treasury yield is up 3% today. Jesus Christ. So the TLT trade that I opened last week ought to be doing pretty well today. Sorry. FTX dude should hit USA soil soon. Oh, really? Yeah, that is supposed. I thought he had already gotten put in jail as of like the 13th or the 14th, if I remembered right. Maybe I'm wrong. Maybe I missed the memo there. But the TLT trade that I had open previously, it was a call credit spread, assuming that TLT is going to be below 109. And hit the nail on the head with this one. So my analysis behind this trade was that the bond markets were lying to themselves and trying to convince themselves that the Fed wasn't going to be doing their job, basically. Where the Fed expected rates at 5.1 to 5.4% at the end of next year, whereas the bond markets expected the federal funds rate between 4.25 and 4.5%. So there was a 0.75% discrepancy between what the bond market wanted and what the Fed said. And people love the saying, don't fight the Fed whenever we have unlimited quantitative easing. But they hate the saying whenever we have insane quantitative tightening. So, message to all investors, do not fight the Fed. That's why you're seeing the 10-year Treasury rate rise today to 3.6, up from 3.48 as of Friday's close. So definitely a huge gap up in the bond market. Still a lot of bond volatility, which is crazy. Which ended up sending TLT down because whenever rates go up, the bond prices come down. They have a negative correlation with one another. Although the TLT is a 20-year Treasury bond ETF, so 20-year Treasury bond prices, whereas TNX is 10-year Treasury bond, the yield of the 10-year Treasury bond. So they're not exactly one-to-one correlation just because one's a 10-year and one's a 20-year. But they do generally have a negative correlation with one another. Looks like the Dow is actually doing okay this morning. It's up 0.06%. So industrials are doing a little bit better. So this is your Coca-Cola. This is your staples. So this is Coca-Cola, This is Walmart. This is McDonald's. This companies that people can't live without, even if we go into a recession, basically. But yeah, let's get out of this TLT trade while we're ahead. They're going for 6 right now. I opened 11 at 30. I'll try to close them at 5, but I'm very doubtful that Robinhood will let me close them at 5. So we'll see. We'll see if Robinhood is any bit forgiving to me today. Probably not with the Iron Condor that I opened earlier. Yeah, go figure. Okay, that's fine. I'll lose an extra $11 or whatever. I don't care. That is the shitty part about trading with Robinhood, is the bid-ask spreads are always going to be a lot wider, which eats into your profits. So I don't suggest trading with Robinhood, just because of the bid-asks, and if you're using spread options, that makes it that much worse. But Robinhood is like a hard drug. It's just hard to get away from. Closing options, alerts, premium, 101, premium. Just took profits on the TLT 109, 110 call credit spread. That one expires this week, I think on the 23rd. Is this Friday? Yeah, something like that. I don't do hard drugs, by the way. That was drugs are bad. Robinhood, yeah, they are Robinhood for sure, for sure. Anyway, Roddick says lame in response to me not doing hard drugs. I'm sorry. Okay. So this is the Iron Condor that I had opened earlier. So you'll see that I got a really shitty price for it. 25 cents. I opened 30 spreads. Right now I'm down by $90 now. And I'm assuming SPY is going to be between 380 and 386. So still planning to hold this. I think there's a fat chance or I guess a slim chance we go down to 380, but there's definitely that likelihood. I do want to maybe close some of the position just because we did cross below the 382.50 mark, and we're definitely continuing that downtrend set from this morning's open. So I will decrease the position while we can. I'm gonna close 10 of 30, and hopefully we can close them at a decent value. Probably not. Yeah, you see, I placed the order for the ask price, and I'm still not getting filled. The beauty of Robinhood. Gambling your life savings is a good rush. Yeah, you're not wrong. Like this is going for 25. The ask is 27. You're still not filling me at 28. How does that make sense? Make it make sense, please, Robinhood. Ugh. These market makers are just vicious. Cutthroat, man. They love to take my money. Little joke that I ended at the... Oh, there we go. So I closed 10 of them at 28, so we took a little $30 loss so far. I'm still holding the 20 of them. Just wanted to decrease my risk for that trade. But let's see. Closing options alerts, premium, 101, premium. Just cut losses on 10 of 30, SPY 379, 380 to 386, 387. IC for Iron Condors expiring today, 12/19 at 28 each. And of course, I'm getting ripped off like no other. But it is what it is. feel like continuing to trade with Robinhood is just like an abusive relationship. Like, I know that it's bad for me, but I'm still doing it. What else we got going on? We got the Bank of America $37 put. This one expires. This is a Leaps option, which if you watched my video yesterday, you'll call me a hypocrite. But I bought a Bank of America $37 Leaps put option, assuming that Bank of America is going to do pretty poorly between now and 2025, and I'm assuming that it's going to hit a new low. So Bank of America, if we go over to their yearly chart, it's getting pretty close to the yearly low, currently trading at 32, and I'm expecting it to break through the 29 mark. We still have a couple more weeks to their next earnings report on the 13th, but banks are going to have a very rough time given the very quick interest rate hikes. We saw interest rates were 0% to start the year, and now they're at 4.5 or whatever, right? So that means that people that wanted to buy a nice luxurious car or a really big house can't really afford it because the prices for those vehicles and the prices of homes haven't come down as much to reflect that. So there's going to be less borrowing, which means that their top line, their revenue, is going to be significantly lower because people just aren't taking on many loans right now because they can't afford to do so, right? If you're paying an extra 3% interest on a home, that means that your mortgage is probably going to go up by about 50%. Like if you look at mortgage calculators, if we put in, I don't know, $300,000 loan, the interest rates at the beginning were about 3.5%, if I remember correctly. That's what I was quoted for, I think, in January of this year, if I remember correctly. So it was 3.5%. So let's just be moderate and say 3.7%, right? So in that case, for a $300,000 loan, my monthly payment is going to be $1,380. Now the interest rates, I think, are about 6%, maybe 6.5%. We'll be moderate and say 6%. So now that same loan is $1,800 a month versus $1,300 a month. So that means that now I'm paying an extra $500 a month just to pay off the interest for this loan. So I'm not getting any added value for this home. I'm not getting a bigger home. I'm not getting a newer home. I'm putting all of that $500 just towards the interest payments. And you're already seeing people struggling to pay for transportation, energy, food because of the high inflation. So who has the money, the extra $500 a month for that interest payment, right? So less loans going out right now, which means that Bank of America and all the banks are going to be taking on less revenue. Am I buying a house soon? I flip back and forth on it. I love to go to open houses just to kind of scope out the market. Yesterday, I went to a place that I actually thought was a reasonable price. So it's a very nice neighborhood. It's actually in the same neighborhood that I'm in. Brand new construction. I don't know if y'all know what Pittsburgh houses are like, but they're all super duper old. Like they were all built in like 1910, basically. So this one was a brand new construction, one of those modern-esque homes that are very square-shaped. If you live up in the Northeast, homes are built upward and not outward like they are in Texas. I love Texas homes a lot more. Besides the point, though. So a very nice, square, modern building, 3 bedrooms, I think it was 1.5 bath, but it was going for $485,000. And I actually thought that it was a reasonable price for what it was because, if you try to buy that home at the beginning, whenever the Fed started to tighten, that home would have probably cost you $600,000 or $700,000 easily. Because I've looked at comparable homes in the same neighborhood, and those were going for like 600, 700, sometimes even $800,000 for a 3-bedroom, 2-bath home. Like, it's absolutely ridiculous still. But I thought that 485 was a reasonable price for it. The agents did say that there was a bid for it, but I don't know if she was saying that just to get me to bite or if there was actually a bid for it, because I don't know many people that can afford a $485,000 home right now. Like if I put, say, 20% down, if I put $80,000, that home would cost me $1,800 a month. My current rent is like $1,100 a month. Now I could afford the extra $700 a month because, my income right now has been doing pretty well. But for me, I'm more all about saving as much money as possible. Like I drive a bum ass Hyundai. I only pay $1,100 for rent, and my freaking apartment is like falling apart. You can see that I record up here in the attic, so I try to save money in whatever ways that I can. And try to maximize my income too by just adding new income streams. But yeah, I've been thinking about buying a home, haven't bitten the bullet yet. We'll see. I need to get my income up significantly before I do that, I feel like. Looks like the SPY Iron Condor not doing so hot with SPY falling back below 382. Let's check out the charts. SPY. Alright. I say if it goes to a new 2-day low, we might want to exit. So if it goes below 380, I'll call it quits for this trade. So create an alert at or below 381. All right. And I want to open a new trade. So tomorrow we don't have any more economic data coming out. So probably going to get another flat day tomorrow, I would assume. We started the week at 383. Maybe we end today in like the middle between 381 and 382.50, which would be like 381.70 if I had to guess. So let's call it 382. As long as we don't just continue to sell off like crazy. But let me do a... Actually, you know what? Let's do an Iron Butterfly instead. I think an Iron Butterfly would be nice little diversity of strategies instead of just doing 2 Iron Condors. Apple breaking a support in tomorrow's earnings day. Yeah, Nike. I'm trading Nike. I've got a few earnings on the watch list for this week. Nike. Let me see what others. And I'll do a price analysis before the earnings, before each earnings report, before I open the trade. But let's see, the premium watch list. So Nike is 12:20 after hours, so tomorrow after hours. Carnival Cruise Lines is the 21st, so Wednesday pre-market. And then Micron is 12:21 after hours, so Wednesday after hours. So those are the 3 that I'm looking to play this week: Nike, Carnival, Micron, and then my price assumption: down for Nike, down or flat for Carnival, and then flat for Micron. But let's see. I want to open that SPY Iron Butterfly, assuming that it's going to end tomorrow at 382. Currently, it's trading at 382, which means that we should get a good credit for it because it's trading at the strike price that we want. So the closer to at the money, the better for an Iron Butterfly. Hopefully, we can open this quickly before SPY makes a big move in one direction or another. And I think I'm going to set this about 6 wide. So 376 is where I'm assuming it's going to stay above. And then 382 plus 6 would be 388. So anywhere between 376 and 388. The credit for it's actually not that good. Meh. That sucks. Okay. So we got to change our strike prices if we want to get a better risk-reward ratio. Oh, that's because the expiration date is for today. That makes a lot more sense. Okay. So if I do tomorrow's expiration date, which is what I wanted, let's see what that ends up paying. It should be better since it has an extra day for SPY to move. Whoops, that's the wrong. All right, so tomorrow's expiration date, the credit is a little bit better. Yeah, 306. Whoops. What the heck, man? That is not what I wanted. Okay, 388. All right. So you risk about 250 to make 300. Yeah. For an Iron Butterfly, you would want more, I would think, but let's decrease the range to 4 and 4. So instead of between 376 and 388, I'm going to do 378 and 386. So it's tightening the range up, which decreases our odds of making a profit, but that also makes the risk-reward ratio that much better. So you could either do the 6 wide and get 350 credit, risk 250, or you can do the 4 wide, get 277 credit and risk 120. That one I can get behind. Now let's see what the bid-ask spread is. That's going to be the fun part. God damn it. I can't even see what the ask is here. There we go. 285 and 280. Okay. I think that's reasonable. 280. I'll try to get it for 284. No, 283. Okay. Yeah, I didn't get that. I'm actually going to open 2 of them. 283. Let me try that order again. It didn't go through. 282, I guess. Might get filled. No. Robinhood. Why do you have to do this to me every freaking time? Alright, I'm going to have to replace the order for 275. Looks like. And we got filled for a little bit better. So, Iron Butterfly that expires tomorrow. Assuming SPY is going to end tomorrow at 282. And I have a $4 range, or $4 in either side, so an $8 range for it. New options, alerts, premium, 101, freemium. Just opened a new SPY Iron Butterfly expiring tomorrow. So this is going to be a swing trade that expires on the 20th. Let's see, 554 over 2, got 277. All right. And let me type in the strike prices too. Looks like SPY's coming back to the 383 level maybe. We'll see. Where the hell is my strike prices for this iron butterfly though? 382, 386, 376, 376, 382, 382, 386. No. Yeah, 386. Oh, jeez. Okay. I guess I should post the screenshot for my spreads so people know which ones I'm buying and selling. Makes their lives a little bit easier. Okay. What's the difference between an iron condor and an iron butterfly? Great question. Let me just post this and I'll get to that. So an iron condor, you're assuming that the stock is going to be in a range. So the trade that I opened was a 378, 382, 386 iron butterfly, right? So I could have just opened an iron condor by opening a 386, 387 call spread and then a 378, 377 put credit spread, okay? But I have a specific point or a pinpoint in mind that I think SPY is going to end the day. So I think SPY is going to end tomorrow at $382, right? So I have a specific pinpoint that I have in mind. So what I did was I sold a 382 call, a 382 put, bought a 386 since that's the range that I'm assuming SPY is going to be between, and then I bought a 378. So I'm assuming that it's going to be between 378 and 386, but I think that there's a good chance that it's going to be at 382. So you use the outside strike prices as like your limits, basically, of where you think the stock is going to be above and below for the put and then for the call. And then you pinpoint a single price where you think the stock is going to end the day. So for me, that was 382. That I think SPY is going to end the day tomorrow. But yeah, SPY ended up recovering that 382.50 mark. That means we get to hold on to our put credit spreads, it seems like, for right now. And those should be gaining a little bit of value. Let's see. This is a not the put credit spreads, I guess the iron condor that I had opened. Up $100 so far right now. They're going for 20 cents a piece, and I thought there was about a 10 to a 15% chance that these go against me, so I'm going to close anywhere between 15 cents each and 10 cents each. Right now they're going for 20, so still about $5 more to lose in value here. SPY is currently trading at 382.76, so it's just about the middle of the range that we need it, between 380 and 386. Yeah, but let's see what else we can trade. If SPY does end up going up today, it's going to create a better opportunity to go short for Nike. So NKE, looking to trade their earnings, which is tomorrow after hours. Currently, they're down by 1.25%, so obviously not a great time to short if they're already down. I'd rather wait for them to recover if the rest of the market ends up recovering. So shorting right now at 104.50, probably not the best of ideas if you want to try to time it better. But my assumption is that Nike's going to have a pretty bad earnings report, and the reason why I think that, so if you look at Lulu earnings, Lulu, they were absolutely slaughtered. So I ended up taking a put debit spread for Lulu earnings, and I made a crap ton of money, like $1,100 on that. They ended up gapping down. Nike ended up gapping down, but not on the same day. So they ended up gapping down from the 14th to the 15th and then the 16th, whereas Lulu, their earnings that made them gap down was on the 9th and the 10th. Or the 8th and the 9th, I should say. So it wasn't really a sympathy trade. So a sympathy trade is a like stock, so two companies that are in the same sort of industry. So you would have assumed that Nike would have came down on the 8th and the ninth because Lulu had a bad earnings, but instead Nike barely dropped compared to Lulu's, gap down. So I think that creates a decent short opportunity in NKE or Nike. Now, I don't know if it's going to gap down as much as Lulu because Lulu is, a very high-end brand, and with a high-end, clothing brand for sports apparel, they're probably not going to be doing the best when people can't even afford to put food on their table. Now, Nike, on the other hand, they're a lot more affordable. You go to Lulu, you're going to spend like $100 on a freaking t-shirt. If you go to Nike, on the other hand, they have a range. You could buy a t-shirt from Nike for probably $100 if you want to buy their most premium. But you're probably only going to spend like $15 or $20 on a Nike shirt. So, a lot more affordable than Lulu. But I do still think that it has some room to sell off. Maybe they'll do better next quarter, with the, what's it called? The new year coming up. Generally, I would think that Lulu and Nike would do better, probably more sales. But for this quarter, I don't think it's going to be as good. What has more risk, an Iron Condor and Iron Butterfly? Usually an Iron Condor is going to have more risk because you're setting a range instead of a pinpoint. So there's a higher likelihood that a stock is going to be in a range than at a single price, right? So the higher the likelihood, I don't know why I emphasize hood, the higher the likelihood of a trade working out, the less risk that you're taking on, basically, based on where the stock is going to be. So the more risk that you have to put up accordingly, right? So with the Iron Butterfly that I had opened, I'll show and I'll compare the Iron Condor that I had opened for today. I got $25 in credit, so that means that I'm risking 3 to make 1. So you subtract the difference between the strike prices of $1 for the puts, $1 for the calls, minus 25. That means that I'm risking 75 to make 25, right? So there's a 3 to 1 risk reward ratio. Whereas the Iron Butterfly that I had opened, let's see, this one right here, the difference between my strike prices is $4, right? And I ended up getting paid $2.75. So 4 minus $2.75. That means that my risk reward ratio would be 125 to 2.75. So that would be a 0.45 risk reward ratio, whereas the Iron Condor was a 3 risk reward ratio. All right, let's see. What is dragging us down today? Oh, it's just volatility. Yeah, but SPYs ended up recovering today. Not really too surprised. Again, I think that no news is kind of good news, but that could be weighed down by the recession fears. But overall, I think we're just going to stay in this range, 381 to 384.50. So keep an Iron Condor open and just chilling today, I guess. Not really much going on. If Nike does end up going up, I do want to take the short position on it. So maybe if it goes back above say Friday's close, which was 105.85, then I'll end up opening that short position. So I'll create an alert at or above 105.85. And then I'll probably do my price analysis for it later. But just to give you a rough estimate of where I think it might be, I would probably take this gap right here that it had. I think that it could fall maybe about 5% down to right below $100. If we look at the risk range or how much it's expected to move in either direction, it's $8. So that gives us a pretty decent chance of making a profit for it. The closer you get to that risk range, or the higher that you go above the risk range, the less likely that is to work out. So basically the risk range is one standard deviation move. So about 68% of the time, or is it 64? I don't know, 64 or 68. You can just call it 2/3 of the time. It's going to be within the risk range. So for this, it's $8 up, $8 down. Right now it's trading at 105 basically. So you would call it between 113 at the top. And then I usually like to signal the risk range with a square. And then $8 down from 105 would be 97, right? Yeah. Math is hard. Basic addition and subtraction. Trying to figure that out still. Anyway, so that's your risk range for Nike this week. Very wide range. But I'm assuming that it's probably going to be in the bottom quarter of that range, under 100. If I had to guess. But I want to wait until it reaches 105.86 or 105.85. That way I can get a little bit better of a risk-reward ratio. If it doesn't happen, then I might not take the trade. Sometimes it's better to miss out on an opportunity. But we'll see how this trade works out. The earnings isn't until tomorrow, so we still got time for it. But yeah. I think that's all the trades that I'll make today. SPY's trading at 383.50. Got about 3 more minutes until 10:30. So I guess we'll just cut it off here. So I'll show what trades I have open. The Iron Condor is up by 100 right now. They're going for 21 each. I opened them at 25 each. Still have 20 of these open. The Iron Butterfly that I had opened, currently losing a little bit of value. I opened 2 of them for 277. Right now they're going for 283. So we'll see how these trades work out. We'll try to open that Nike hopefully by tomorrow morning. If not, we might just miss out on that trade. But I will catch y'all tomorrow at 9:30 in the morning, and hopefully you'll have a great trading day. See you, everybody.